Hi guys, my name is Mike and I talk finance, investment and business. In today's video, we want to talk about building a simple financial statement. Now, except you have an accountant that help you build this stuff, but it's quite expensive employing an accountant to help you track all this stuff, which is something you can just do using Excel and do it fine and better. But the main aim for this is just to help you track your movement or your financial success, help you track how fast your investments are going, help you track how fast you're spending your money or how bad you're spending your money and how you can improve on it, and also open your mind to see better ways to which you can improve yourself, probably getting more knowledge about finance, about investments, about business, so you can do better, you understand? Because this is a reflection of who you are. I know sometimes things go haywire, it's possible, but this is a reflection of who you are. And if it's not good enough, it means you want to improve yourself. You understand? I believe you understand what I'm trying to say. If it's not good enough, it means you want to improve. And if it's good, you also want to improve better, because you can start giving yourself margins. I want to improve by 5%, I want to improve by 10%, and this is the information to show if you are actually improving or not. Okay, so for disclaimer, please, this is kind of different from what we have in the accounting perspective. I study business and finance, and I know this for sure is kind of different, but I believe it's going to be easy for everybody to understand finance, investment, how to improve their financial IQ by the deep understanding of how, I say deep, but it's not deep as it were, but it's detailed and it's simple. You understand me? For instance, let's look at income statement. Income statement, it says income. For goodness sake, income. It's supposed to just show income. That's what it's supposed to show, right? Income statement is a statement that shows income. That's what it shows. So it's a statement that shows the income you generate from your assets. So this is my income statement for the month for 2020. My income statement for 2020. Now, this is not just for January. This is a combination of January down to December. So for you to generate a yearly financial statement as this, you have to generate monthly for January, for February, for March, for April, for May, June, July, down to December. I've talked a lot. Okay, so let's start for my own income statement. I believe I've cleared every doubt now. So someone just say, come on, Mike, this is different from what we understand in Introduction to Accounting 101. Yes, it's different because this is finance, this is wealth creation. Okay, so this is my income statement. Let me click on my highlighter. Oh, my screen's filled up. Okay, right. Let's click black. Okay, so this is income statement. This is my cash flow statement. This is my profit and loss account. This is my balance sheet. Okay, so let's dive deep into this. Okay, my income statement. These are all my portfolios. These are all my portfolios. Let me use the green highlighter. These are all my portfolios. Okay, then these are the income we generate from these portfolios. These are the income generated from this portfolio. So the data you derive from here, you're not just generating this data. It's a data you get from the performance of your assets. Except you just want to practice this stuff. Okay, that's fine. But from your asset, these are the data we get from them. We use this data to derive these charts. Okay. And if you don't understand how to build this financial statement, please just comment below and I'll give a video I give a step-by-step video on how to build this. It doesn't take anything. Okay, and don't hesitate to subscribe if this is already making sense to you. Subscribe, share, click on the notification bell. Why am I always skipping around to mention this stuff? Click on the notification bell so you can be the first to receive our videos. If you're interested in finance, investment, business, creativity in your business, increasing your financial IQ. Okay, so let's dive back. So this is the chart. Okay, I'm talking too much, man. Okay, so I believe we're done with that. Cash flow is just showing how money flows in, how cash flows in and flows out of your business or investment or personal well-being, whatever, whatever, whatever. Okay, so these are my own cash flow. We have machine purchase, staff salary, real estate. Poultry is a poultry farm business. It's not a sport car, it's a car, not a sport car. It's a car. Vacation, stock portfolio. And when I mean vacation, this is just for this is a household vacation I'm talking about. This is a household vacation I'm talking about. And this went for December and some part of January. Yeah, yeah. Okay. So stock portfolio one, stock portfolio two. I mean December 2020, stroke January 2021. Okay. Stock portfolio, grocery, utilities, S&P 500. This is a business, not gold mine. This is a business. Bitcoin investment. Okay. So this is what we have as our cash flow. And mind you, this is not perfectly accurate. Yeah, this is not perfectly accurate. Let the truth be told. This is not perfectly accurate. Okay, so for inflows, money coming in, these are the inflows. Okay, then for money going out, is this a nice pen? Okay, so this showing the money going out. Okay, so the cash flow statement just shows you information of how money comes in, it goes out of your business or your life, your household, and whatever you have. So the combination of everything is what we have in our cash flow statement. Now I have in my phone when I go out to Lidl, when I go out to Sainsbury, I stay in Scotland, when I go out to Morrison, I use the bus or whatever I do, I record this in my Excel in my phone. Immediately I buy something, I write it on my Excel so I can be able to track whatever I'm using to build here. But it's not accurate. Like it's not accurate. Okay, so this is the chart. The reason for the chart is that someone can just see this and be able to read exactly what it's on the screen and not be confused. Okay, so the profit and loss account is just showing if you are profitable or you are losing. It's simple. It's showing if you're profitable or if you're losing. I know it's a combination of both income statement and the profit and loss account for accounting, because in account you have sales, you have cost of sales or cost of goods sold, you have gross profit margin, SGAs, you have we do EBITDA, we do whatever, whatever, whatever. You know that stuff. I don't want to go deep here. Okay. Then net profit, net loss. That's how accounting grade it. But for everyone to understand, I believe this is the best way you can do it. It's my own discovery. Probably somebody have done it. I don't know. But this is my own discovery. Okay. So profit and loss accounts and it's just showing you if you're profitable or you're making loss, and it's generated from the cash flow. So you need a cash flow statement to generate the profit and loss account. And luckily for us, we were profitable with about what's here, $3.225 million. $3.225 million. $3.225 million. I want you to imagine yourself, even if this is not a realistic stuff as you may think it, but imagine yourself like this is you and this is what you want to do. I also work with mind. I believe in things. I believe in vision. I write my goals. So I think you should do this. Like I said, this is not exactly accurate. This is not exactly accurate, but this is how it is. The figures may not be exactly accurate, but it's a projection of what we want to be and what we want to be doing. Okay, guys, so luckily for us, this is what we made at the end of December 2020. Okay, and this is the data to show that performance. Okay, so this is our balance sheet accounts. The balance sheet is just to show you the asset must be equal to your liability. That's what accountants said. But if you're interested in becoming wealthy, I believe we want to have more assets or asset generating investments or income generating investments than liabilities. I know it's possible you go use other people's money, OPM, borrow money from the bank to do your investment, but your aim is that your investment should be able to pay your liability. So you want to always be greater than your liability. So I don't know why the accountants say your asset must be equal to your liability. Well, that's sensible enough because the shareholders' equity plus the money you're taking from the bank should be reflecting in the business, which is your assets or what you have as inventory and all of that. You understand? But in terms of building wealth, I believe your assets should be greater than, asset generating investment, income generating investment rather, should be greater than your liability. So for us, we have our assets greater than our liability. Okay, so this is a reflection of it. Our asset is greater than our liability, and this is our balance sheet. So the combination of this whole thing makes the financial statement. I hope my handwriting is nice enough. Okay, cheers, guys. Please give your comment below if this is helpful to you, if you want something that has not been trashed properly well, if you want to understand how to build your financial statement using Excel, just give a comment below. Like, share, subscribe, click on the notification bell. Cheers, guys. See you another day. Bye for now.